Hello investors. It's been a month of activity for us. We have had a lot of moves in your portfolio, and whenever markets correct, it's a good time to reassess and get back to the drawing board. As the markets have corrected thanks to the action in Ukraine and Russia, stocks also corrected, and this was a time for us to get deep into our portfolio. As I told you earlier, we like to do our research in falling markets. We like to identify those stocks which have been laggards, and they have been for the last few months. These need to be eliminated where we find that the earnings is at risk, and number two is that the price performance also is no longer giving us that bit of confidence. So we've actually added 4 new stocks to your portfolio this month, which is, as I said, a lot of activity for our style of investing. However, there are moments in the life cycle of the portfolio when we get into this mode of activity, because that's when we feel certain trends are changing, some new trends are emerging, and it is important for us to capitalize on this. So what I'm going to cover are these 4 companies and a brief rationale as to why we bought them. Accompanying this video will also be a detailed note on each of these companies, the investment case, so you can definitely refer to that for more detail. But let me touch upon these 4 companies. The first stock that we bought in your portfolio was Mindtree. Now, Mindtree is an IT services company. Its parentage moved to L&T a few years ago. So we have a very big, proven, solid parent. And the interesting part of Mindtree is that it has demonstrated excellent execution in the last few years in the area of IT services. You can see it on your screen. You can see the EPS growth over the last 5 to 6 years, moved from 24 to 90. So you can see that kind of positive trend. This is in the green wordings that you see right below Mindtree. That is the EPS growth year on year. And correlated to that in the lower channel are the price moves. So also you can see that how the stock has been very well accepted and rewarded for the market. We feel that in the post-COVID world, the world is moving definitely towards more digitization. The whole area of cloud, etc., is becoming acceptable. It's a norm, and these companies are going to be the executors of these contracts for large global companies. And we feel that Mindtree is very, very placed. What we like a little bit more about this compared to other IT service companies is its importance and play in the area of retail and travel. We feel that in the whole restart trade, these 2 areas are going to receive a flip. There have been no fresh investments because most companies in this areas have been struggling. But as the restart happens, I think business starts flowing. We feel that these 2 verticals will also be big beneficiaries. So on that reason, on that premise, we have added Mindtree to your portfolio. The second stock that we have added is something which is a little uncharacteristic. It is more in the mid to small cap space. It's a company called Polyplex. Now, Polyplex has been around for very long but little known, and this is into the PET films. These are the plastic films you use for packaging. But Polyplex has been an outstanding executor, or the plants that they run are very, very efficient. And not only do they run in India, but they run across 5 different countries. So they have a very big market share in US, in Thailand, Turkey and India. And geographically, they are very, very well distributed over the world. These are very, very competitive markets, and that is why they are very much up there in the global scene in the whole area of packaging. Of course, we all know with the whole internet economy and the home deliveries, plastic packaging have become very important for preservation. Food is obviously their big area. They make these plastic films or these plastic wrappers or labels which you find with a lot of the food products. That's a major component, but they're also there in a lot of other industrial areas. So we feel that Polyplex, again, as I said, a more mid to small cap kind of play, but the management has excellent execution, and you can really see it in terms of the EPS growth. You will see that how this company has grown from 9 to almost 200 plus in the last 5 to 6 years. You can also see the reward in the stock price, and we feel going ahead, this company, which is also available at very reasonable valuations, will get discovered by larger institutional players, and we feel that this has the potential to be a large multiplier from where it is today. The third stock that we have bought in your portfolio is a company called IEX, that is the Indian Energy Exchange. Now this is again a very interesting play, a very niche player in the whole energy space. You know, India has a lot of power, but the problem is we still have blackouts. And there is this very big contradiction, and the problem is in the whole area of the delivery mechanism. So IEX comes to fill that space, which is it's an exchange with which you can buy and sell energy. So you have the producers, the generators, you have the distributors, and you have the consumers. They all come onto this platform and freely trade energy units. They can be on spot basis or future basis. What this really helps is the even distribution of energy. You know, it's not about having surpluses somewhere, having shortages, and the whole process is essentially the lack of an exchange. So IEX is that platform that is able to help good price discovery, look for inefficiencies and proper distribution. So we feel that in India there is a lot of scope for this to really pick up. Even today, most energy exchanges are bilateral. This is slowly picking up, and we feel that the runway ahead is very long, and it will be a very important component in the whole power scene that is in India, and helping the whole industrialization wave that we are looking at. You know how important energy is. This is also moving ahead into areas of alternative energies and other areas rather than the traditional electricity areas. The fourth company that we have is CDSL. This is the depository. Now all the shares that we buy for you are ultimately lying with the depository. So CDSL is a depository. It is nothing but a bank of your shares. You know, in the olden days, shares used to be in the physical format. Obviously they would get torn, lost, forged, etc. And we moved to dematerialization. So that is why you don't get share certificates. What you get is only a statement, and that statement or that holder of those shares is CDSL along with NSDL, the other player in this market. But we feel that CDSL has done very well, and what is happening is this big shift that is happening is in the whole retail investing. You know, post the COVID fall that was in 2020, you realize that the whole retail investor generation has really come into the markets. And we have seen historically in countries like the US, etc., when countries go through this kind of growth, this investor growth, this tends to be a very long tail, and that leads to more accounts being opened, more transaction happening, and various other activities that are linked to such exchange that there is. So CDSL is another play. It's a depository of shares. It is a bank for the shares that you hold. We feel that we like the annuity income. We like the fact that once you open an account, even though you may not trade much, you still keep getting your cash flows. So we like the annuity income of this play. We think that it is going to be a big beneficiary of the whole financialization of markets, which is work in progress, but more importantly is the expansion of the retail investor. And we think that the shift that has happened in the last 2 years is permanent. It is irreversible. What we are seeing for a change is that even when markets fall, you find retail investors, unlike previous periods, not very skittish. So we are very positive on this. So essentially this is to summarize the 4 companies that we have bought for you. As I said, a detailed note in the PDF is accompanying this video. You can definitely go through that, and always, as usual, we are open to answer any questions or any doubts you have on this or any other portfolio stocks. But more importantly is that what we have done is that the short-term underperformance is getting solved. We are trying to remedy it. You can see this kind of movement in the portfolio. We think that in the month or 2 ahead, you will still see some more movement. But the objective is ultimately to align with the trend. And whenever we feel that markets move, the trend changes, the need for us as trend investors is to be able to align your portfolio. That's what we've done. The 4 stocks that we have got into your portfolio, we've shared with you. We've eliminated some laggards, which may be great companies, great names, but what we find lacking is the term of performance, or it is not showing or not rewarding in terms of price. Staying true to our philosophy of trend investing. I leave you for this month. Thank you very much.